Pay attention now if you're ready for the ultimate cheat sheet. If you've been studying trading for so long, maybe 1 to 2 or even 3 years, and you're still not seeing any consistency in your trading profits, what are you actually missing? Hey traders, this video is specially tailored for all the independent and aspiring traders out there aiming to find your own progress in the trading world and quit your 9 to 5 or 9 to 7 jobs eventually. Recently, I went to another Traders for a Cause networking event and spoke to many up-and-coming traders. It hit me during our chat that there's a common misunderstanding about what it really takes to make progress in trading. Many traders ask me, I've been at this trading game for ages and consistency seems like a mirage. What am I missing? Well, I got a lot of questions like, Shay, was there a turning point where you finally noticed drastic improvements in your trading and finally becoming profitable? All of these are really valid questions, but the answers are not simple yes or no. So I'm here to share some insights as your senpai in trading on what you should focus on in order to find real progress as a trader. Okay, this is a problem most struggling traders have. Most of you are diligently watching videos, analyzing trades daily, and yes, experiencing the roller coaster of wins and losses. Yet you're stuck, wondering why you're not moving forward. And I had been there myself 2 years ago when I got started, and I would admit, it sucked. Knowing that you've watched 1,000 hours of DVDs or YouTube videos and still got nothing to show for it. Well, the truth is that most traders, especially in the early stages, are not doing anything drastically different from their peers. Yes, you should be watching the market, keeping a journal, and learning from video lessons, whether they are free or paid. But unless you're in a specialized role with access to unique tools, like those in hedge funds or prop firms, the playing field is pretty level at the very beginning. But why then do some traders seem to leap ahead, while others feel like they're running in the same place? From my own personal journey and those I've had the honor to learn from, I pinpoint 4 critical barriers holding many traders back. The 4 key barriers in your path to success are: Number 1, a lack of focus on what truly matters in trading, especially when you're just starting out. Number 2, trying to be unique and reinventing your own trading strategies. Number 3, not seeing the full picture in regards to reaching profitability. And number 4, misunderstanding what trading consistency actually means. Let's zoom in to the first hurdle, a lack of focus during the learning process, especially in the beginning. There's a very old but wise Chinese proverb saying, "The man who chases many rabbits catches none." This reminds me of a story about Bill Gates and Warren Buffett. When they were asked about the key to success, they both answered with a single word: focus. In the world of trading, this principle is gold and mandatory, especially in the very beginning. I've observed a common habit among new traders. They tend to be chasing and jumping from stock A to stock B and from strategy A to the next. During pre-market, stock A pops up, you draw your key levels and are thinking about to trade it with your setup, but when market opens, something else is breaking out and showing up on your scanner. And now you're chasing that one new stock and forgot all about your original trading plan on stock A. Or another scenario is that you see Tesla has a double bottom. You're chasing that one. Oh wait, somebody else in the chat room mentioned the double top on Nvidia. Now you're trying to flip short on Nvidia stock. Wait a minute. You're trying to do too many things at the same time. Nowadays, we all have different tools like websites, scanners, or even chat rooms to get trade ideas from. So it's not difficult to find potential trades in the market. But what's actually difficult is only focusing on what works best for you. If your personal focus is on the trend join long strategy, then why are you looking at stocks breaking down to short? Vice versa, if you know short selling works best for you, then why are you trying to look at stocks breaking out due to positive news? And that's probably why you're seeing a lot of randomness in your trading P&L curve if you truly take a moment to review your trades. When I first started trading, I made similar mistakes. I was trying to learn short selling, pump and dumps, and buying breakouts at the same time. Well, guess what happened? I ended up buying breakouts on pump and dumps. And that left me a bag holder with a trading account that's one directional, down. Social media platforms such as Twitter and YouTube have been fantastic resources for sharing and bouncing off trade ideas and strategies. But it's still very crucial for you to sift through the noise and hone in on what truly aligns with your trading style. Remember this golden rule to finding consistency in your trading. Find what works for you, repeat the process, and stick to it. What I've always recommended to new traders is focus on learning just one style of trading strategy at once before you start extending yourself toward other areas, especially if they're drastically different. It's only after I slapped myself in the face and forced myself to only focus on trading one kind of strategy that I stopped losing money to random strategies and random stocks. At the very beginning of this process, I focused on dip buying large cap breakouts. And once I've had some good results for a few months, that's when I started adding stuff like overnight swings to my playbook, then eventually short selling. But again, I never tried to learn and trade all of these various strategies all at the same time. So if you do find yourself hopping from one strategy to another and chasing every pattern that emerges, it's no wonder your trading account resembles a roller coaster ride rather than real progress. So it's time to start streamlining your focus.
And whether you're long and you're getting killed, or whether you're short and you're getting killed, whatever it is, you can get yourself out of it. You can get yourself out of it, but if you're not focused, if you're not centered, it's going to be very difficult.
Oh, by the way, this wouldn't be an ultimate humble trader trading guide without a friendly reminder to hit the like button if you appreciate videos like this. And I have a special gift for you. Comment free strategy down below and I'll send you a link to claim a free strategy crash course. This strategy crash course has 4 very comprehensive videos in it, teaching you the ins and outs of a highly repeatable buy the dip strategy. From how to find suitable stocks to trade, to timing entries, exits, and to risk management. This course will be especially useful for traders who still do not have a properly defined trading setup and criteria. So make sure to comment free strategy down below to get your very first step-by-step trading setup and guide. Moving on to the second reason why you're not seeing progress in trading. It's probably because you're trying to reinvent the wheel or reinventing a brand new trading strategy. A lot of traders think that you need to find a very unique way to trade and conquer the market, like the smartest trader ever. They think they need to go through a lot of trial and error like Thomas Edison and create their own unique strategies. Wrong. Let me tell you why. Remember, trading is not a brand new game. Sure, it got really popular in 2020, but retail traders have been doing this for decades. And you should recognize that almost every conceivable strategy, from macro catalysts to event-driven strategies, from chart patterns like ABCD, panic dip buy, to sector-specific plays, they have all been explored. All of these patterns and strategies are not brand new concepts. For example, large cap stocks that break out of a range after a long-term consolidation tend to trend up and continue breaking out. Or small cap micro float stocks that's up on no news but hype and short squeeze, they will eventually sell off and go back to where they come from. These are just some of the proven concepts in the stock market that have worked again and again in the past. So if someone else has already studied and tested the strategies for you, then why is there a need for you to completely invent your own from scratch? The most successful traders I've interviewed, they have often succeeded by refining and adapting existing strategies to fit their own personalities, rather than trying to create something entirely new. So, how do you go about borrowing a strategy that works for other pro traders and make it your own? Because that's the tricky part. You need to understand the components that make up a successful trading strategy. Pay attention now if you're ready for the ultimate cheat sheet. Here are the 7 critical questions to guide you in adopting a trading strategy to fit your personality. Number 1, what is the strategy's name? Knowing the name will help you identify and research it further. Number 2, what are the stock scanning filters? This helps you pinpoint how to find potential trades based on the strategy daily, weekly, or monthly. For example, take one of my favorite strategies, the gap up reversal long. Just from the name itself, you know that you're focusing on stocks that have gapped up and you're looking to go long. Number 3, what are the stock selection criteria? Once your filters cast you a wide net, how do you narrow down to just a few best candidates to trade? This is where you can go and study my past videos and learn what I look for. I look for positive catalysts and daily breakout charts. You can't really copy exactly what I do, but you can certainly study enough to understand the thoughts behind the trade and start making it your own. Number 4 on the cheat sheet, what are the entry signals? I personally like to enter in the first hour of the day, but perhaps you can find examples of a good entry during the middle of the day and start planning and testing your very own entry signal with technical indicators. Number 5, what are the exit signals? Knowing when to exit is just as important as knowing when to enter the trade. I'm personally not good at holding a stock for the entire day, but perhaps you can find an edge there with backtesting. Number 6, what are the invalidation signals? These can tell you when your initial trade idea is no longer valid, prompting an early exit. So using the same strategy as an example, I personally don't like to long stocks on the gap up reversal long strategy anymore if the stock broke down my pre-market key levels. And that's my risk. But perhaps you can revise and widen the risk to let the stock to have more room to breathe. Number 7, this one is very important. Do you have a portfolio of before and after screenshots? Visual examples of successful and failed trades can be very valuable for learning and pattern recognition. I've been saving my charts and labeling them for years. You should do that for any 1 or 2 strategies that you are trading. This is the easiest way to train your eyes and start mastering a single strategy that suits your personality. Again, these 7 questions are essentially your cheat sheet to finding a consistent trading strategy and adopting that from something you learn from someone else. Make sure you share this video with your trading partners as well if you see someone else struggling. Also, please remember to give the video a thumbs up if you're enjoying this trading guide. Okay, now that you understand you do not need to reinvent the wheel when it comes to trading strategies, you should also understand that becoming profitable is a long-term game of risk management. Trading is a probabilities game, where the goal is to ensure your large gains consistently overshadow your small losses over time. You may or may not like math, because I certainly don't, but you do need to learn how to manage probabilities and risk management in your trading. Let's break down a very common misconception. A high win rate is a requirement to succeed in trading. While it may seem logical to aim for a 90 to 95% win rate, the reality is that even the most successful traders I know, they can operate within a 40 to 50% win range. It's not about winning every single trade, but managing your trades in a way that your wins significantly outweigh your losses over the long haul. Consider my ex-husband, and the trader of course, Mike Bagholder, who has a $10,000 account. Mike finally learned to not bag hold in his losing trades and became a master in dip buying with only a 50% win rate because he's just an average trader, not the smartest person ever, and that's okay. However, Mike is now really disciplined and he knows how to control his risk-reward ratio to a 1-to-3 average. In a profitable trade, Mike would on average make 2 to 3% account growth. In a losing trade though, he manages to limit the drawback to only 1 to 2% of his account. This kind of discipline would translate to an average gain of 10 to 20% per month, leading to significant annual growth despite only a 50% win rate. This example illustrates the principle of probability and risk management in trading. It's the overall strategy and management of wins and losses that propels your account growth, not the illusion of winning every single trade and being green every single day. So it's time to start embracing the fact that trading involves cycles of wins and losses, and there's no strategy that will yield you 100% success all the time. There will be days or even weeks when your go-to strategy just doesn't pan out as expected. The key is how you manage those losses and sticking with your risk management. I personally think this mindset shift is really crucial because rather than fixating on immediate wins or the frustration of losses, focus on the long-term game instead. Trading isn't a sprint, it's a marathon where consistency, strategy, and risk management, they will define your success path.
It's a marathon, not a sprint. It's a marathon, not a sprint.
So do you want to make slow but steady progress like Mike Backholder? Don't ignore the importance of risk management and small wins. You can also learn this concept from my free risk management crash course on my channel. Okay, that brings us to the next point. The fourth hurdle for new traders to overcome is understanding what consistency really means for trading. What does it really mean to be a consistent trader? There's a common misconception that consistency in trading equates to locking in a fixed amount of profit daily or weekly. For example, like some arbitrary goals of making a flat $100 a day or hitting exactly $50,000 every single month. However, this belief is far from the reality of trading. True consistency isn't about reaching the same P&L on the dot every single time. It's about averaging out to a steady profit over the long haul with some natural fluctuations in your P&L curve. Similar to the example we talked about earlier, imagine a trader. On some days, he's netting 1 to 2% or losing 1 to 2%. Others, he's netting 3 to 5%. And on an exceptionally good month, perhaps he's making 10, 20%. Over the year, these numbers could average out to, say, a 10% monthly gain. Here's a golden tip here for you. Being a consistent trader is about compounding average returns over time for the strategies that you're focused on. If your idea of consistency revolves around banking a precise number every single month without fail, then it's time for a reality check. Such expectations are not only unrealistic, but could steer you away from sticking with your progress in trading. Based on my very own experience, as well as the stories of successful traders I've interviewed, our career did not take off because of luck. We all went through the same boring reality of trading. After spending months of losing, we finally found one repeatable pattern that works for us individually, and we started to see the benefits of repeating the same boring process over and over again. This is what I've realized recently. Trading eventually becomes very boring because you're repeating the same thing every single day. I've been trading this gap up reversal long setup for many years, and I haven't drastically changed a single thing in my planning process. I have, yes, improved the way I execute my entries and exits over the years, but I stick with the same scanning process for the same chart patterns. And I also accept the fact that this particular pattern does not show up every single day, and that's okay. So let me know your thoughts on this. Do you agree or disagree? A trading process, if done right, it should eventually become very boring. Thank you for joining me on this comprehensive guide today. If you found value in this video, don't forget to hit the like button and subscribe for more insights. And should you have any questions, feel free to leave your comments down below. I'll do my best to answer you. If you want to learn more about my trading strategies, especially the gap up reversal long we talked about, you can check out my free trading crash course over here.